last Friday, Cathie Wood, CEO and founder of ARK Invest, mentioned that she believes a brief market correction could be possible. So let's break down what she said and how we should be responding to it. But before we get into that, I briefly want to mention that we're having a holiday sale on all of our courses, including some of our most popular ones, such as how to build a $100 a day system by being able to make and profit $100 each and every single day, or fractal energy trading, which covers the 4 rules to make money in any market in any time frame, or 0DTE options, which are our most profitable, most winning trade strategy. So for a limited time, get an awesome sale on our best courses, or consider signing up for our elite service, which lets you get live trading room access as we live stream and trade the market open. So let's listen to what Cathie Wood said and try to dissect what she meant by it.
There is one indicator that gives me pause. And while I do not believe we're in a bubble, sentiment indicators for the equity market in particular. So this would be the bull-bear ratios or the American, I don't know if it's AAII, American Academy of Individual Investors. That indicator is out to very high levels. And typically, when it gets to very high positive readings, we are going to have a correction. Now, not always. As I mentioned, not a lot of other indicators seem to be in bubble territory. But I wouldn't be surprised to see some sort of correction after this seasonally strong period that we're in. That said, as I mentioned, I think we've got a long way to go in the equity market.
Now, as it relates to what Cathie Wood said, she's not alone. There's been a lot of other prominent figures in the investing and market space that have recently come out and said, yeah, we need a correction. Things are a little bit overbought right now, and a 10% correction may be what's best for the market overall. So a healthy correction would be about 10%. And I agree with Cathie that it would be brief. So even if I was concerned that we'd see a post-holiday correction, well, I could either use a trailing stop and buy the dip, or I could just use option strategies that help play into this expected move. You know, Cathie has made her reputation by having long-only portfolio positions, but she's not a blind optimist. She can see what's going on right now in the markets, and even if there are potentially bullish events in the future, well, she can still see the writing on the wall, because it'll likely be that there's no stimulus package, there's no change in fiscal policy, and historically there has been a brief pause in the markets before the next president has been sworn in. In a sense, Cathie can see that, well, there might be a small correction. That's actually an opportunity to buy, especially for those who have a long-only position portfolio, like Cathie does. Furthermore, what we need to be reminded of is if anything has been able to be taken away from this year, it's that the Fed has a secret agenda. Maybe its only mandate, and that's making sure that markets only go up. This is known as the Fed put. Recently, a new study was published called The Economics of the Fed Put, and it showed conclusively that the Fed put actually exists. The authors showed conclusively and compelling evidence that the Fed put has existed all the way back to the mid-1990s. However, as this year has shown, and as their research shows, the Fed has to beat expectations of how much they will cut regarding interest rates. And because the market is becoming more volatile, that's why the Fed's job is increasingly difficult. And that also explains why the Fed did more at the beginning of 2020 than it did during the financial crisis of 2008. Now, given this cycle and what the Fed will increasingly have to do, does this mean that the market going up is a certainty? Well, that's not exactly a sure thing. But I think what is the need for us to bet against the Fed, or at least somehow hedge the bet of what the Fed's influence is. So betting on innovation and betting on an alternative asset class such as Bitcoin, well, that gives us nice exposure to markets that aren't exactly going to play by the Fed's rules or are going to beat expectations versus the rest of the stock market. So in a sense, what Cathie Wood is doing, even if on the surface is objectionable, being long only right now and betting on innovation, betting on alternative asset classes, while also being able to spot a correction and see the positive of it, I think that's a very robust and necessary stance in today's markets. But I want to hear what you have to say. How are you betting for 2021? Where do you think the market's going? Is it a time to buy or sell? And what has been your favorite stock of this year that you're looking to buy more of? But thanks for watching. I'll see you in the next one. Cheers.